Hey, today I have a banger of a video for you. I sat down with my friend Eric Bastian from Guild Mortgage and we talk about mortgages. He's been in the industry since the 90s, so he's got a lot of experience. It is a little bit of a long one, so I apologize in advance, but I promise you if you stick it through, you'll learn a lot of good nuggets. Heads up too, my dog is in and out of the video and there's some minor audio issues, but I promise you we're gonna get that ironed out for the next ones, okay? Without further ado, here's the video. Well, first of all, I want to thank you for taking the time to talk to me today about this. I feel like when it comes to mortgages and lending, there's certain things that like maybe my age group and my peer group doesn't really come out of school knowing, right?
Right.
Like I feel like civics class, even though I didn't go to school here, doesn't really give you uh, a wealth of knowledge when it comes to like something that's very important to the American life, which is
Correct.
owning a home, giving it to your kids, having that generational wealth. So
And they don't do that in schools here either.
no, right?
So really no preparing for it. So yeah,
Yeah.
but it's interesting, if I may.
Yeah. Yeah.
I had a gentleman today that called me. He was referred by another lender. I'm sorry, by another loan officer,
Mhm.
and he says, "I heard you can get down payment assistance," and he's going on and going on, and we're going back and forth. And I got all his information. I go, well, "What do you think your credit score is?" He goes, "Well, 577." I said, "Look, you need a 640 to get any assistance, but I could see what I can do." Anyway, make a long story short, he got his score from Credit Karma. Credit Karma was way off, and it turned out it was 607, so a lot closer. Then I had a supplement, not supplement, but predictor, if you will,
Okay.
current predictor. If he does this and this and this, and sometimes it can cost thousands of dollars. Well, my simulator, my
Mhm.
credit simulator said if you just pay about $400 worth of credit cards, your score will shoot up to 640.
Oh wow.
And he was thrilled to death. And he has $5,800 to work with. And the reason I reminded me, and I'm going talking about this, is because it was exactly what you said. He says, "I don't even know where to begin,"
Yeah.
because sometimes we say, "Hey, go to our, fill out your information and so on and so forth." But we had a nice conversation, and he seems to be thrilled to death that I can help him.
That's awesome. That's
Yeah.
awesome. And that's definitely like why I'm trying to do this and why I'm trying to like shed a little bit more light on these processes, which are kind
Right.
of basic and simple, but at the same time they're not widely known, right? So
Right.
I kind of wanted to start with literally the most basic thing, which I don't think. I mean, some people out there definitely know what a mortgage is, but some
Yeah.
people don't know what a mortgage is. They
Yeah.
just hear the word mortgage and that kind of spooks them or freaks them out. They Google something. There's 9,000 things. So, what is a mortgage and how does it
So
work?
yeah, and a mortgage is simply a loan against the house that you're purchasing, whether it's your primary residence,
Mhm.
an investment property, or even a vacation home. Um, because it's such a large loan amount, it's going to be a lot. I don't want to use the word difficult, but a lot more involved than maybe doing a car loan
Right.
or doing another type of secure loan. Car is probably the best. Is probably the best thing because a lot of times you'll go to a car dealership, you tell them you make $5,000 a month or whatever, they don't check it, and you're out the door with a car.
Right.
House, it's not like that. House, you have to verify everything. So as far as mortgage goes, there's probably hundreds of types, but we would let you know there's really only two or three for most people. Conventional loan is probably the best one. It has the easiest guidelines. It has it's as low as 3% down if you're a first time home buyer. If your credit's not as great, FHA is very popular for first time home buyers. It's 3.5% down. And then if you're a veteran, you get to finance 100%.
Nice.
And there's other programs too for people that can't that aren't able to verify their income. And of course, there's loans for that, but those usually require a lot more money down and a higher interest rate.
Cool. Awesome.
So,
Thank you for that. Let's see what's Mama.
yeah,
You like that too?
yeah. I was gonna say
She's enjoying it.
she's yeah.
She's right at home, literally. All right. Can you tell me a little bit about the application process? Like how is it? A little bit of step by step and just
Well, depending on the situation, the experienced people will go right to your website. They know what you want. And again, if you more than likely, if you're buying a house, you probably have financed the car. Maybe not, but and you kind of know or even a credit card. You got to fill out your information. I usually give people the choice. I said, you can go to my website, or we can do it over the phone. Ideally, I like them to go to the website because there's no mistakes. What I mean is, like, the guy's name today, I spelled it wrong because I didn't hear him right over the phone. But I'm going to have a conversation with them too. I'll start asking them before I even take the application, how much, do you need help? Are you a first time home buyer? Do you need assistance? Because I specialize in down payment assistance. Are you, how much money you have to work with? The gentleman that I spoke about today said, well, I'm getting $5,800 back in my taxes, which, by the way, this is a great time of year for that because a lot of people are getting money back from their taxes and they can use it as down payment.
100%.
The lost my train of thought.
Oh yeah, the application is
Oh, the
a bit
application
different.
itself.
Yeah.
So I mean, and then I would get into, I would say, okay, well, the first thing we really need to look at is, and then what do you do for a living?
Right.
If you're a truck driver that gets paid by the miles, you're probably, I really need to see. I need to look at your income harder than I would be that if someone worked at Disney who makes $20 an hour or something.
Right.
So normally the first step is ask a couple general questions, get their information. The credit and income is about 99% of everything. The gentleman today, again, I keep going back to that as an example. His debt ratio was a little tight. It was at 50%.
You really want to play, huh?
Get the doggy.
If you don't pay attention.
Oh, it's okay. It's all right. So but he wanted a house for this particular house was 270. It kind of worked out. If he pays off the bills, I told him to pay off to help him get a score up, that kind of thing. But the first step is getting pre-qual. Pre-qual is you tell me you make $5,000 a month. I see your credit. I see your debt. You tell me how much you have to work with, and I could say, okay, you're pre-qualified. Based on what you told me, you're pre-qualified. But that doesn't hold a lot of water. Pre-approval does. As soon as they get pre-qualified, I send them a checklist of documents to upload. Pay stubs, W-2s, bank statements, copy of your driver's license. And then I can confirm what you told me is correct. Like I said, the person that works at Disney that works 40 hours a week, unless it usually matches up. You have somebody, for example, that's a nurse that has differential income, you got to take an average. The ones that don't have a standard salary, you got to average it out, and it makes it a little bit more difficult. For example, you might have someone that says, "Oh, I've been making $2,000 a month in overtime." Well, if he's only been doing it for the last 6 months and didn't have it for the year before, he can't use it.
Gotcha.
So that's but when they send us the documentation, I can verify it. If I'm confused by it, sometimes I'll send it to an underwriter. They'll verify it, and then I send them a pre-approval letter. A pre-qualification, and a pre-approval letter, both are enough to start shopping for a house. Right. Pre-approval letter, just most other realtors will tell you, and sellers, it holds a lot more weight. It means I verified it.
Absolutely, yeah. As I can attest, like most, if not every single MLS listing, once you have a buyer that wants to put in an offer, you need to attach that either pre-qualification,
right?
The pre-qual or the actual application, or some sort of proof of funds, so that they know it's serious.
And the other thing too, is the one thing I don't like about the mortgage industry is you might come to me and say, well, how much do they approve for? And I'll say, well, 300,000.
Yeah.
Well, when I say 300,000, I'm estimating the taxes.
Right.
I'm estimating the homeowner's insurance, and I'm estimating the homeowner's association fee.
Right.
So, in my head, what average for that price range?
Gotcha. So you're including all these different expenses in the actual payment.
And until I get the property, I won't know for sure.
Right.
A lot of times they'll say, hey, can you look at this scenario and tell me what the payment is?
As soon as you have the property, you know how much is going to...
I don't know the insurance yet.
Okay.
But we can kind of, that doesn't usually swing that dramatic, but we'll know what the taxes and the HOA are.
Yeah. For insurance, it's a little easier to kind of overshoot just by a little bit, just because it doesn't really.
Yeah,
Go
I use 150 a month or 1800 a year
Okay.
on average, and more often than not, it's lower than that.
Yeah.
So, but yeah, you got to keep that in mind. I'll go to. Here's another example. I had somebody said, "Look, you just don't qualify for much. She wants 150,000." Well, that was great. She found a $150,000 condo. Well, she doesn't qualify for the $400 HOA fee. So now it's almost like she's buying a $300,000 house.
Oh wow.
That is,
Yeah. Yes. Something's stuck in there.
yeah, oh my God.
That's all good. How much money does somebody need for a down payment? I know that's broad and that's kind of wide, but generally speaking, and then you can get into more specifics too.
Well, if they get the loan itself would require 3 to 3.5%, unless they're a veteran. Veteran zero.
Okay.
However, there's so many down payment assistance programs. The most general one in the state of Florida is about 10,000 assistance. So if you buy a house for 250,000 and you get $10,000 assistance, you have enough for the down payment and maybe a little bit left over for closing costs. So the main thing is it's not only the down payment, it's the closing cost.
Right.
Because closing costs could be 3 to 6% of the purchase price.
Mm-hmm.
So if you bought something for 200,000, it could be 6 to 12,000 in fees.
Yeah.
And the 12,000 is more the taxes, the insurance, that kind of stuff. Luckily, in most markets, the seller will help maybe pay for the closing costs a little bit.
They'll throw some concessions
Yeah,
out.
so and that helps because otherwise, without the assistance, you're a first-time home buyer, which I know I'm speaking about that more than anything.
Yeah.
Is you can be $20,000.
Okay.
Who has that kind of money?
Yeah. Yeah, that's not the average person for sure.
Yeah, and if you're, obviously the ones that already have a house and selling a house, they're the ones that are normally putting the main money down.
Like you said, if they have enough at least to cover the difference between the down payment assistance and the closing cost, then they can move forward.
Yeah, yeah. I mean, and you know, and there's all kinds of people think, well, geez, how much money do I have or how much can I get? Some people overthink. I'm sorry, not overthink, but some people um, will say, oh, I can get 7,000, and they really don't have any plan.
Right.
You can get a gift from a family member, which happens more often
Yeah.
than you might think. Um, a financial planner may not agree with this, but the 401k is very helpful. If you take a loan against your 401k, usually you can take a loan against half of it. And again, not everybody who's starting off has 20, 30, $40,000 in their 401k, but you can take a loan and you're paying yourself back. I've done it to buy my house. Right. You can even cash out part of your 401k without without a penalty if it's for your primary residence.
All right.
So you can do that too. You do have to pay taxes on it, um, but so you have those two other options too. Sometimes the down payment, there's different types of down payment assistance programs. If they're a first responder or the front line, there's one that gives them right now, gives them up to 5% assistance. It's the best one. The rates are lower on those programs. The fees are lower.
Heroes,
yeah,
right?
Hometown Heroes.
Yeah.
And by the time we re-air, I mean, this could continue for years or it could stop in a year. You just never know. But that program is definitely the best.
Yeah. Yeah.
So,
which right now at the beginning of 2023, we're still good.
Still have it, and there's no end in sight.
Yeah. Absolutely.
So, and the great thing about it is that sometimes you get too much money, and what I mean by that is if you have a VA, you get 5% assistance. You get $15,000.
Yeah.
Well, there's no money down. There's not $15,000 in closing costs. So you know what we do? We take that extra money and we pay down the principal.
Right.
So now they're making a payment on a lower amount.
Right.
Now the $15,000 does have to be paid back when they sell the house, or it's deferred, I think, 30 years.
Gotcha.
So if they want to refinance or something down the road, they would have to pay. We have to make sure
give it back.
We explain that. They have to pay it back.
Yeah.
But
you give it back so that somebody else can use it, and it's cyclical and it's awesome for Florida.
Yeah.
Cool. When it comes to affordability, how do you determine broadly speaking, how much house somebody can afford?
So my general rule of thumb, and no one else has told me this, I just came up with this fact on my own.
Hmm.
Think of your gross income. Okay, let's just say it's 5,000 a month. Divide it in half. Okay, that's 2,500. So all your debts and your new mortgage max 2,500. So if you have a $300 car payment and $200 credit cards,
Hmm.
there's 2,000 left to buy a house. You can got, and with today's rates, you can probably get a $300,000 house, maybe, or
Yeah.
close to it.
Yeah.
Um, if you have, if you only make 3,000 a month, then it's down to 1,500, and then if you have a 600 car payment, you're probably not going to be able to afford much.
Gotcha. So look at what you're making divided by half and try and fit everything in there so that
And
it makes
half is
sense.
the max. So
Right.
I kind of say go. I try to say go a little bit less than half.
Gotcha.
But if I have somebody and they say, even if they don't want to pull their credit yet, and they want to get an idea, because that does happen. People don't want, to pull their credit right away. They say, I have no debt. I would say, okay, well, based on what you're telling me, you may be able to go up to $2,500.
Hmm.
Okay. Um, that's half, but let's just say 22, 2,300, just a little bit less, just
Yeah.
because that's the standard ratio is 45 to 50.
But if you can fit it in there, then
Yeah.
that's in general terms, you're good to go.
Yeah.
You'll be able
Yeah.
to fit it.
And I mean, and then even those, in the credit piece, like I said, good example. I don't get somebody with a really bad credit score and say, forget it. I I do a simulator.
Can I get a credit? Can I get a loan or a mortgage on a house with a low credit score?
So the minimum credit score is 540 for FHA. However, with 540, you'd have to put 10% down. 580 is 3.5% down.
Okay.
VA 540, 0% down. Conventional 620. Um, None of those options would get you any type of assistance, which I've been talking about a lot today.
Yeah.
Um, and just because you can put 10% down with a 540 score does not guarantee any type of approval. We still have to look and make sure.
That it fits.
Yeah, so there's most of the time that would be somebody that just had something like negative years ago and just doesn't have anything really good since then. It's nothing recent, 10 years ago or 3 years ago or whatever. As long as it's more than 2 years ago, they've had some problems. And it makes sense. Then we can do a manual approval
Gotcha.
based on that. But 580 is really the minimum you ideally want to be at. Because here's the thing: if you have to put 10% down with a 540 score,
Yeah.
I would say save your money. Use that. Use some of that money to pay down some credit cards with, or whatever it is you have to pay off to get your score up, and and then not only will you get, you want to put as much money down on the deal because now you get a higher score, but perhaps you get assistance and you get a better rate too.
Right.
And that's the other thing too. Like, we didn't want to specifically talk about rates, but the lower the score, the lower the rate's going to be. And I'm sorry, the higher the rate's going to be.
Right.
And the rates max out. We can't have it. And what happens when a rate max out? Let's just say the max rate today is 7%. Somebody with a 620 score and a 540 score, both are going to get the 7%. The problem is the person with the 540 score is going to wind up paying a lot more fees, because what they're doing is they're paying the market is saying, hey, we can give you the 7% rate, but you got to pay 3 points, for example.
Yeah.
So you got to really be. Can you always refinance later down the road? Absolutely, but you just got to keep that in mind. You're throwing a lot of money up front.
Yeah. Initially, it's gonna be a.
So I'd rather, my thing is, let's get their score up, even
Yeah.
if it takes a couple months. Like the gentleman I talked about today, he could pay all this stuff up tomorrow. And listen, this is another cool thing that we'll do. Um, we give them specific instructions, and it says, pay it down to this dollar amount. Give me a letter from the creditor that says this is what the due balance is. We submit that to our credit reporting agency. Within a few days, we get a rescore. That costs us money to do that, but we're not allowed to charge the borrower, so it's a cost that we take on. Of course, there's been times we've done it, and someone went with another lender, which is a little frustrating. But
That's.
we would do that. We don't want to we don't want to do it on every file, but like the gentleman I have today is from one of my better realtors, obviously, who's a friend of his. I want
Yeah.
to, take care of him
Right.
the best I can. So, um,
Typically, how long from first touch, trying to get the pre-approval to being completely underwritten and closing on the house? How long does that typically take?
so once they find the house, I mean, because when I do a pre-approval, it's good. The credit's good for 4 months.
Okay.
So it's the funny thing is when I put the loan in, it'll ask me for a closing date. I always put 4 months out because it reminds me when the date's coming up. I'm like, hey,
Right.
your credit, you know. But in generally speaking, we have somebody that applied today. They give me their documents tomorrow. I verified. I get them a pre-approval letter. Today's Friday. This weekend, they're looking. They go under contract. I would say, and a lot of times they'll say to me, "How many days do you need?" And I just say 30. Give me 30. The only thing is sometimes customers get busy and there's a lot of stuff we need, and if they don't send us everything we need right away, that's usually the only thing that holds up the process.
Yeah, it's human
Yeah,
interaction, human
I mean,
error.
there's like we have like a travel nurses. They're just never, they have all the best intentions, but they just can't get to us as quick. And then the underwriter reviews it, and then they could ask for something that we didn't think about. But typically speaking, it's 30 days, and the process really is, we order an appraisal. That is the one thing we ask for out of pocket up front from the customer,
Yeah.
credit card. We order the appraisal because we have to verify through a third party that the value is what the seller thinks it is.
Yeah. And
Um,
that happened after 2008 because, lenders had their own appraisers and the whole
Oh
thing,
yeah,
right?
yeah, exactly,
Yeah.
exactly. We have a panel. I don't know who it's going to go to.
Yeah.
We have our preferred panels, but we have no idea who it's going to go to. The one the other day I had an appraisal waiver. Sometimes if you put 20% down and the value is consistent with either Zillow or whatever they're using,
Yeah.
there'll be an appraisal waiver and they can save a $600 fee. But that doesn't happen that often, but it does happen probably, one out of every few or so.
Gotcha.
Um, but yeah, basically, by the time you go under contract, hopefully I've gotten all the documents I requested. Sometimes somebody can't find their 21 W 2 from 2 years ago, and we're just like, okay, just get it to us when you can. But, if you get us, I have your pay stub, I have your W 2 from 2022, and in this case, coming up, it's going to be 2023. Um, and I have your bank statements, and I've reviewed that. It goes to the processor. Will review it. I have the same processor just about on every file. Her name's Gail. She's wonderful, and she gets it, sends it to underwriting. Underwriter comes back and says, "Okay, you're conditionally approved," or I would call loan commitment, and it basically says, you are going to get this loan as long as number one, the appraisal comes in. And then there might be a couple other things. There's usually things that we don't typically ask for up front. For example, there may be, you know, an interesting deposit on their bank statement that maybe we didn't catch at first. So we just ask for what it is. As long as it's not cash, it's not a problem usually. There might be, hey, we see that you applied for a car last month. We just want to make sure you didn't get another car out. Stuff like that.
Oh, we've seen that.
Yeah,
We've
yeah,
seen all
exactly.
that. It's just you
Yeah,
get approved, get pre-approved, you bought a Porsche.
yeah, yeah.
What are you doing?
Yeah, I mean, and I do have a booklet, and I was looking for it before I came, but it must be at my office. That really kind of goes over everything from start to finish, and it says there's a do's and don'ts,
Yeah.
and a lot of stuff seem common sense, but it's people get carried away or they forget about it, or I had somebody get a new car. Buying a new car doesn't guarantee you're not going to not get it denied, but we have to make sure we reorganize, and I got to prove that this one's paid off now. I got to get the note and all the information on this new one,
Readjust all
and make sure everything, the debt ratios were. I mean, it's happened.
Yeah.
Or people, or I'll take their application, and they forget like 2 weeks ago they opened up a new credit card, and it's not reporting on the credit report yet. We got to put that payment against them. So stuff like that happens, but I don't usually when I give someone a pre-approval letter. I usually don't give you the tightest of pre-approval letters. I want there to be a little wiggle room because number one, like if you said if somebody might really be approved for 350, I might say 325, 330 just to have that wiggle room.
Right.
Now that might come to bite me because my competitor down the street might say, "Oh, you're 350," and they think that that's a better deal. But that person is not, is just playing with fire a little bit because you just never know.
Can't guarantee that that's what it's going to be at the end.
Exactly.
And it's even worse if that's happened to me too, where somebody comes to me with a pre-approval that's 380, and then once you start going through underwriting, it's like actually you're looking more like 320, and then you're already like under contract, and then you have to kind of pull out or something.
And what I was saying earlier too is like the way the mortgage industry is, we always go by the price, and it really should be the payment.
Yeah.
And the price is just easy to remember because you might, let's just say I pre-approved somebody for just $300,000, and I put in the taxes of, what's the average for 3,000? Let's just say it's $3,000, and I put the insurance at the average insurance, and then I put a HOA. It's, $50 a month is probably the general average. But you give me somebody that, and their HOA is $300 a month, kind of like where I am at Legends. It's not quite that high, but they may not approve anymore. So that you just got to keep an eye on that. As far as the realtor and the customers are concerned, keep an eye. If the HOA is low, $100 or so, I wouldn't sweat it. If it's $200, $300, $400, just think that's another bill I didn't think you had. Yeah. So we got to be careful about that.
Especially down in Four Quarters, the capital of vacationers.
Oh yeah.
Solara, those HOAs sometimes.
Oh, I bet. Well, Legends has two where I live. Legends has like $225 for the master, and then our subdivision within the subdivision is like another $50 or $60.
Oh wow.
So, but
and that's monthly.
And that's monthly, yeah. So, but it's the price we pay for having a gated community and
that
gym
and that golf course.
Mm-hmm.
Can't forget about that.
Yeah, I'm on the 14th.
I'm pretty sure I went through all this stuff. So just to summarize, what would be it's like a young family out there. They're looking at purchasing a home soon, maybe this year, maybe they're preparing this year so that they can buy next year. What is the game plan? Like what do they have to do to get all their eggs in a row so that everything's smooth sailing once they find the house that they want to buy?
So the first thing we need to do is, more than anything, is let's look at what their credit situation is. A lot of people are hesitant. They don't want you to put your credit. It's an inquiry. They're told not to have too many inquiries. Did you know with a mortgage, you can apply for just about as many companies as you want within 30 days. It counts as one. A car dealer is the opposite.
Wow.
So you always want to encourage. So the people that don't want you to pull their credit, it's almost like you're just playing blindly. So the first thing we want to do is pull your credit, and then we want to gather your documents. And then, like I said, you're good. And even if you're not ready, maybe you're ready 6 or 9 months down the road, at least you know where you're at now, and maybe start working on some stuff. If the credit isn't up par. We do so much down payment assistance, so we really want that score to be 640. The good thing with that, we talked about earlier about the lower the score, the worse the rate is. But on down payment assistance, you can have a 640 score, or you can have an 800 score. The rate's the same.
Right.
So it just hits that one area. And we all have the same program throughout the state too. It's just a matter of what company you want to work with, because the state does the rates and the fees and everything else. But yeah, the number one thing is the credit. Let's see where we're at. Let's make sure the debt to income ratio is okay. A lot of self-employed people. You have someone that does a Schedule C. They told me they made $40,000 last year. I always ask for that immediately because I say, look at line, it used to be line 31C. I don't know what it is now. And lo and behold, they wrote off 39,000. And now I'm like, well, your income's 1,000 for the year.
Yeah.
I mean, I see what you're doing. You're trying to save money and everything else. Yeah. But yeah, you can't.
It's not gonna help you buy.
You can't do that. Yeah. Now there are other programs. I have a gentleman that I know of that doesn't show income. It's usually the higher end stuff, where he's able to, he put 10% down and paid a higher rate, so he didn't have to show his income.
Okay.
So there's other options like that, but that rate today would probably be 8 or 9% at least.
Yeah.
But it's better than renting. So And keep this in mind too, for those that somebody will say, "Well, my rent's $2,000 a month. I don't want to pay more than $2,000 a month." Keep in mind, if you're paying 2,400 a month on a house, it's your house. You get right off the interest. You're gonna, I'm not an accountant, but if you got 5,000 this year, like my other gentleman I was telling you about did, I almost could assure you now he's paying 20,000 of interest this year. He's probably gonna get double that back next year. So there's all kinds of benefits of being a homeowner.
Yeah.
So
it really does pay out, not just in the short term, but in the long term.
right.
Absolutely. Yeah. So credit score number one.
Yes.
Credit's king.
Credit score and credit situation, liabilities. Do you have too much debt out there? That kind of thing.
Income, make sure that
Yeah.
that actual house payment, which is what we should be focusing on, fits within that, and be able to work with awesome people that are going to be able to
Absolutely
find exactly what it is that they want.
Yeah.
Awesome. I think that's pretty much it. Actually, for credit repair, do you work with people and like giving them tips and tricks of how to get their credit from, like, let's say they're at like 560, let's get that to like a 640 at least.
Yeah, the simulator I have is like that. Now, if their score's really, really bad, we do work with a national credit report company. I refer them maybe something once every 6 months, because most of the time, I mean, if you have a score in the 4s or low 5s, and I just can't see any way to get it up, because these credit report agencies will help dispute stuff, which, by the way, you don't want to dispute anything. I probably should have brought that up, because you dispute messes up the credit. But anyway, over the long run, though, they would help. They would help get the score up by negotiating, collections being paid off and deleted. Another thing too I want to throw out is you could have a 580 credit score. You have a medical collection, and that medical collection is $20. A lot of times they're deleting the medical collections. I say, listen, this is what you need to do. You need to call them, tell them you're going to pay it, and you want a deletion letter. I have a simulator where I X that out. The deletion goes away. I've seen the score go up 100 points. Gee. So especially if it's a collection within the last year. If it's more than a year old, it doesn't do anything. So if there's a recent collection, and a lot of these collections are small, even if they're medical, they tell us, well, you don't really want to, we don't hold the medical against them, but it could screw up their score. So, you have somebody, you have somebody that has a $100 medical collection, may not even know it's there because it was reported 2 months ago. Your score is now in the 5s. We get that. You don't want to just pay it. You want to delete it. Mm-hmm. And they'll do it. Then they'll delete it like it was never there. And then you'd be amazed. And I could show you, like on a seminar or something, I could show you how that works. How quick, how easy that score goes up, because it's like all of a sudden you have a new collection too that's never happened before. Now everything's fine.
It just kind of balloons back to where it should have been without that.
So, but some people, you got to be careful, because we need a 2-year history. If you made 100,000 this year and made 0 last year, the income we're using is 50,000.
The average.
Yeah. If it's trending down, we don't average it. We use the down. Yeah. You can't average out what you didn't, make. Same thing with commissions and overtime and everything else. It's exactly the same. If you're averaging $2,000 a month this year, you need 2-year history. So if there was no overtime, you can't use it. But even if it was $100 a month last month, $2,000 this month, we would average it out. So, but it's not that difficult. We try to make it easy and try to make it fun. Yeah. I go to just about 99% of my closings. Luckily, I have one coming up Thursday. I don't care if it's in Tampa, South Florida, the coast. The furthest I probably have been is West Palm.
Nice.
Tampa, not that long ago. This guy's buying in Ocala, so I'll probably be going up to Ocala. Because a lot of times you meet them before I do. A lot of times I don't meet them. Yeah. Because we really don't need to meet anymore. I mean, some people want to, and obviously we accommodate. But you can just upload your documents, and then I go to meet them, and then the next thing you know, hopefully they're referring some more business.
Yeah,
absolutely.
So I like that you do that. That's awesome. One last thing too, I think because of this pandemic and kind of like the repercussions of so many people, whether they were in the service industry or whatever, like them losing the job, or completely like slashing their income by a giant amount. I feel like a lot of people have dabbled and looked at the idea or have already done like a bankruptcy. How does that affect your ability to buy a house, maybe short term, long term?
So if you file bankruptcy, um, FHA, I believe, is 2 years.
Okay.
I mean,
So within 2 years of you filing bankruptcy or
after it's discharged.
discharge.
It may be 3. I have to
Okay.
check that.
So 2 to 3, don't quote.
Yeah, I'm going by memory.
Gotcha.
If the funny thing is, if you're in a Chapter 13 bankruptcy, which isn't that common, those are the ones that are willing to help.
You negotiate.
Yeah,
Yeah.
a lot. As long as the trustee allows them to buy a house, we can do a house. We can do a loan. It's always going to be FHA. It's going to be a government loan because they would allow it. But yeah, I mean, and same thing with foreclosure. Foreclosure, FHA is 3 years, conventional 7. Bankruptcy, actually, I do think it's 2. Bankruptcy is 2 for FHA, and those are the people that are going to go with the FHA. And there's not really anything. The difference between FHA and conventional is sometimes the FHA rate's better. FHA doesn't matter how much money you have in equity, has mortgage insurance for life. And it also has a funding fee. So which you really don't see, but it's on top of the loan. So, I convince, and an FHA loan is more profitable for the mortgage business.
Right.
But I will tell people every time, get a conventional if you can, because number one, you're not going to have the PMI. When you have the equity in there, and you're not going to have the funding fee. And to be honest, it's going to be an easier approval. Sometimes a conventional we get an appraisal waiver. We don't get that on FHA.
You have to have an appraisal with FHA.
Yeah, you have to. Yeah, absolutely. Yeah. And by the way, it's a much stricter appraisal than conventional. FHA, they'll go on the roof. Yeah. And if he says it needs a new roof, guess what? We're not closing until there's a new roof. Conventional doesn't usually do that unless it's obvious.
Gotcha.
That's why you should get your home inspection. But
I always tell everybody, you should. You should
Yeah.
get the home inspection. I got like 5 people on.
Oh yeah, and always get a 4-point inspection and a win net.
Yeah.
If the house I think is in the last couple of years, you probably don't need all that.
Well, I mean, you'll be surprised. I'm not gonna name any names.
Yeah.
There's a builder that had broken struts on a brand new construction, and the buyers were going to forego an inspection at the last minute. They're like, might as well just do it. It's like $300, $350. The inspection comes back. There's broken truss. They, if they didn't see that, then that would have been something that maybe wouldn't have been covered in the warranty because you already closed on the house.
Right. Yeah. So I mean, we can go on and on about different stuff, but the basic thing is we're licensed. The realtor's licensed. I'm licensed. You look at their NMLS number. As I mentioned the other day, the shorter the number, the more experienced they are. A couple of friends that are in the business that are probably better loan officers than most don't like how I use that analogy. But the bottom line is, if your NMLS digit is 6 digits and not 7 or 8, chances are that person's been doing it longer.
Yeah. And they've been through multiple different markets and seen that.
Yeah, and that too. And like I said, there's several loan officers that are fantastic, and sometimes the newer you are, sometimes it just works out better or whatever. I mean, they're very good, but it's just something to keep in mind. Look at the reviews. I'm very big on my reviews. Yeah. I try to get everybody to do a Google review for me, even if people say they're going to do it. Now this is only with the company I'm at now. I have 12. Mm-hmm. Every single one's a 5-star. Yeah, and I have. But what happens is we do. I try to get everybody to do the Google reviews, but there's reviews with a company that's done differently. There's reviews on Facebook and the Google review. But anyway, look at the reviews, look at the experience, look at what people are saying. You can pull up our NMLS numbers. Anytime you talk to a loan officer, get their NMLS number. It'll tell you, do they have any complaints against them, how much business, how many different places they've worked in the last whatever years. So, I mean, it comes down to whatever, you're comfortable with too. But, and trust your realtor's recommendation too.
Yeah. Yeah.
So, if I have somebody that, now if I pre-approved them and then they find this new realtor and the realtor's saying using their guy, I don't really like that so much because it's like I've already done all the legwork.
Yeah.
But like if you recommended me and they were like, well, I want to use my brother's cousin's sister's friend, you know, I would say, you don't want to push too hard because you don't want to lose it. Yeah. But just say, look, Eric's going to give me an update. I know where Eric lives. I know where Eric works. I know Eric will answer the phone, on the week after hours and on the weekends, just because
it's about the way that somebody works and
right.
does that work for you. And the way that I've done it too is through like referrals. If you're really trying not to like screw up a relationship in your family, I'm like, I don't want you to screw up a relationship in your family. I'll throw them a referral for you, but you can still work with me. I think that's fantastic. And like lately, people have been really noticing the difference between somebody that you can actually have a conversation with, that they can digest something well for you and really give it, in plain simple terms for you, versus somebody that could just be, like, I see this whole like script, like mentality within the real estate industry, and I'm not really about that. Like I come from the service industry. I come from like just off the cuff, having relationships with people and talking about real things and really steering them, not steering, I shouldn't say steering, really giving them exactly what it is that they are asking for, not really trying to make everybody fit into a box, because nobody really fits into boxes. But I hear that. Awesome. Well, I just wanted to thank you again for
my pleasure.
Taking the time. Tell us all the information about where they can find you. I'm going to put some of the stuff on the screen and on the description, but tell us where people can find you and all that stuff.
Well, it's funny. The website's a long one, but it's pause it for a second. It's on it's on the thing. What is it? It's Gilmore. Here, actually, let me just throw that up. Here's my sign that I use at open houses and whatnot. And I always say down payment assistance available. I always want to give that as the first option for first-time home buyers. But as you can see, it's guildmortgage.com/Eric Bastian, or you could scan it. I don't know if the scan comes through that.
Let's put it really close.
And then as you can see, my NMLS number is on there. But I've been doing mortgages in Central Florida since the late 90s. I have lived in Clermont for almost 20 years. My office is in Maitland, and like I had mentioned earlier, I've done business from the Panhandle and to Miami. I haven't done the Keys yet. We're licensed throughout the state, and even if you have somebody out of state, we have people that are licensed that we refer to that work for Guild. So,
thanks again.
I appreciate it. All right, buddy. Thank you.
If you're still watching, thank you so much. Hope you learned a thing or two about mortgages. And if you did, make sure to like this video and subscribe to my channel so that you don't miss the rest of the stuff that I have planned for 2023. If there's anything specific that you'd like to know about real estate, make sure to leave that in the comments below as well, okay? All the information about me and Eric is gonna be in the description, so feel free to reach out to him. And if you do, let him know that I sent you as well. See you next time.